As of late April, mortgage rates have been holding steady with an average 30-year mortgage at about 6.4%, according to Bankrate. It's acting as a 15-month low. Here to break it down for us, Bankrate data analyst Gailey. Alex, good to see you here this morning. So let's talk about the drop right now. What's behind this drop in rates, and do we expect to see it continue to decline? I know we were trending in a positive way months ago, but then things kind of reversed direction.
Well, glad to be here, Chris. And we are finally seeing some breathing room with mortgage rates, largely because the bond market has calmed down from a few weeks ago. The war in Iran spiked oil prices and sent markets into a panic. But now these ceasefire negotiations have brought some relief. Believe it or not, this is actually the best rate environment we've seen in the last 3 home buying seasons. And our Bankrate analysis shows that this has opened a refinance window for about 2.7 million homeowners with rates that are above 7%. We expect rates to hold steady in that low to mid 6% range for now. Any bigger dip likely won't happen until the back half of the year when we have more clarity on inflation.
Well, let me ask you this. How excited should people really be at 6.4, 6.5%? I mean, I know it's a little bit of I guess it's great to see it below 7. But again, if you look over the last 5 to 7 years, this is still astronomical.
Yes, if you compare it to the beginning of the pandemic, certainly it is much higher than those 3% rates we were seeing, but it is a lot better than what we saw in 2023 throughout 24 and 5 when rates peaked closer to 8%. So the best strategy right now is, if you are looking to buying, is to really focus on the numbers that you can control. So what's your credit score, your down payment, your budget for the home? If you find a home today that is in your budget, it is worth moving forward. A lot of people are waiting on the sidelines for those rates to drop below 6%, but that wait could be long. And so really getting your credit score above 740 and shopping around for lenders is what is going to get you the best rate and is what is going to lower those mortgage costs.
And talking about homeowners who are looking to refinance, again, let's say they're at 7.5% right now. With closing costs and things like that, does it make sense to try to refinance now that it's down to 6.4?
Now is a good time to refinance for a specific group of homeowners. And so I'm talking about the 2.7 million homeowners who did recently buy when rates were peaking around 8%. For them, dropping to a low 6% interest rate on an average refi loan would save them about $160 a month, or about $2,000 a year. Now, that is an average, not taking into account individual factors. But the bottom line is that if you can get your rate about 0.75% lower than it is today, then it is usually worth exploring refinancing, and the math certainly starts to check out there.
And finally, as far as touching on these interest rates, the Federal Reserve expected to announce, at another meeting today. Do you think there is any rate change that's going to be potentially disclosed?
The Fed is expected to keep rates steady today, and we might not even see a cut until late 2026. So while inflation is down from its 2022 peaks, recent increases in energy costs and the economic impacts of the Iran war have caused the Fed to take a more cautious approach with monetary policy. So for the short term, that means that borrowing is not going to get more expensive, but it's also not going to get cheaper. But here's the thing. Mortgage rates are not directly influenced by the Fed. So if you're a home buyer or even a homeowner who wants to refinance right now, you can still lock in a better rate without having to wait for the Fed's decision. There are about 2.7 million homeowners who can already save money by refinancing before this decision is made. So again, your credit score is really the single biggest factor that is going to determine whether you get an okay rate or a great rate.
Great. Alex, thank you very much. Appreciate it.